Nvidia's AI boom versus US recession fears. What's next for the market? Nvidia's strong growth continues, while US economic confidence wavers. Nvidia has once again outperformed expectations, with its 2024 revenue more than doubling compared to the previous year, surpassing analysts' forecasts. The company anticipates continued strong growth in the current quarter, exceeding Wall Street's projections. A key driver of this success is Nvidia's latest Blackwell artificial intelligence chip, into which major tech firms are investing billions. Despite emerging competition, Nvidia remains confident that AI advancements will still require significant computing power, ensuring sustained demand for its processors. However, while Nvidia thrives, concerns over the US economy and inflation continue to mount. Consumer sentiment surveys from the Consumer Board and the University of Michigan reflect growing unease about economic stability. This uncertainty is underscored by the inverted yield curve, where the 10-year Treasury yield has fallen below the 3-month nota, widely accepted signal of a potential recession within the next 18 months. Even as Nvidia dominates the AI market and big tech accelerates its capital expenditures, the broader question remains: can technology stabilize a shaky economy? Key market updates you need to know. Nvidia shatters expectations, but faces slower growth. Nvidia released its fourth quarter earnings report, showing an 80% jump in net income to $20.09 billion, while quarterly revenue soared by 78%. The company also provided an optimistic outlook for the next quarter, exceeding LSEG estimates. Despite these strong numbers, Nvidia's growth rate is beginning to slow, leading to a 1.5% dip in its stock price during after-hours trading. CEO Jensen Huang, however, remains bullish, stating that next-gen AI will require 100 times more computing power than previous models. Stock markets rebound as Nasdaq and S&P 500 end losing streaks. On Wednesday, the S&P 500 and Nasdaq Composite managed to break their 4-day losing streaks, posting slight gains of 0.01% and 0.26%, respectively. Meanwhile, the Dow Jones Industrial Average dipped 0.43%. In Asia, markets showed mixed performance. Japan's Nikkei 225 rose by 0.3%, even as 7&I Holdings saw its stock plunge by 12%, following news that its founding family failed to secure financing for a buyout. China's economic policy and focus. China is set to hold its annual parliamentary session, known as the Two Sessions, starting Tuesday. Analysts anticipate that Beijing will lower its annual inflation target to 2%, down from previous year's projections of 3% or higher. There is also speculation that China will increase its budget deficit, a move that could pave the way for significant economic stimulus measures aimed at stabilizing growth. Recession warning. US yield curve inverts. In a concerning development, the 10-year Treasury yield fell below the 3-month note, forming an inverted yield curve, a historically reliable predictor of recessions. The New York Federal Reserve closely tracks this metric, regularly publishing projections on the likelihood of a recession occurring within the next 12 months. This latest development adds to existing concerns about economic instability amid inflationary pressures. Nvidia's earnings expected to shake the markets. According to Goldman Sachs, Nvidia's strong earnings report will have a greater than usual influence on the stock market over the coming days. Two key factors contribute to this. Nvidia's dominance in AI computing, a sector that continues to attract massive investment. Its ripple effect on the broader tech market. Given the company's influence on semiconductor stocks and AI-related companies, India's push to bring Tesla manufacturing to its shores. India has been actively working to attract Tesla into setting up local manufacturing operations, and recent developments suggest that Tesla may finally be considering entering the Indian market. The Indian government has introduced new EV policies aimed at making the country a more attractive destination for Tesla and other electric vehicle manufacturers. One key initiative is a reduction in import duties on EVs, lowering the tax rate from 70% to just 15%. Industry experts believe this move signals India's readiness to support EV production, aligning with Tesla's expansion strategy in new, high-growth markets. While Nvidia continues to dominate the AI revolution, signs of economic instability, rising inflation concerns, an inverted yield curve, and wavering consumer confidence suggest that broader market conditions remain uncertain. Can big tech and AI-driven innovation offset these economic risks? Or are we heading towards a financial downturn despite technological advancements? Let us know your thoughts in the comments below. Stay updated with the latest financial news. Like, share, and subscribe for more insights.